Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hour show. Remember, this show is all for you. So if you have a question, leave your ticker symbol and question in the comments. We'll go over it live during the show. Doesn't matter what I have planned to talk about, as long as we're here to answer your questions. That's it. That's what it's all about. So if you have a question, feel free to ask it at any time during the show. All right. Let's hop into it straight away with today's action. It was a rally day today in the market. The Dow Jones added nearly 600 points. The S&P 500, it surged 1.9%. The NASDAQ ended 1.6% higher. In the Russell 2000, the small caps, they outperformed by gaining 2.5%. After Fed Chair Powell reassured investors that the Fed remains committed to tame inflation, while pointing to a smaller than expected 25 basis point hike, a rate hike that is, in March. So there we have it. All right. That's one of the main reasons why the market rallied today, because we had confirmation. Powell gave confirmation that the Fed in March will raise rates by 25 basis points. That's it. That's all the market needed. That little bit of security, that little bit of knowledge is all the market needed to calm down its fears about the Fed, right? Sometimes the market is just an overreaction. Well, I take that back. Not sometimes, almost all the time. The market is just overreactions going up and going down. Flat and simple, overreactions. Because the Fed, they came out and said it. A 25 basis point rate hike in March, that's what you're going to get. It's amazing how the market can be so overreactive to just a small little bit of knowledge, right? That they're waiting for. But, that's the market. We all play in it. Now, Powell did note that the U.S. economic outlook has become highly uncertain. There we go with that word uncertain again, in the wake of course, Russia's invasion of Ukraine, and that the central bank would proceed carefully. Now, on the corporate front, Ford surged over 8% after announcing that it would split off its company and have the electric vehicle segment and then the legacy production, the ICE vehicle business. They would be two separate entities within Ford itself. So also, Nordstrom, it was up almost 40% after the retailer sales and guidance, they topped estimates big time. HP gained more than 6% after increasing its annual profit forecast amid solid, and I mean solid, demand for the hardware maker's products. In the different sectors in the market today, all 11 S&P 500 sectors actually closed higher in the green, all of them. And 29 of the 30 Dow Jones components, they also closed higher. The financials, energy, materials, industrials, they all rose more than 2%, and technology as well. The communications sector, however, it underperformed on a relative basis. It gained 0.7%. The spike in oil prices was attributed to increased expectations for supply constraints after Russia continued its offensive in Ukraine. But the market might have suspected a near-term peak in oil prices, depending on the result of the ceasefire talks that are scheduled tomorrow. We'll see how they go. Putin says one thing and then does something completely different, right? So who knows how that's going to end up today. Let's see. What a miss by Snow. Oh, yeah. Yep. Warren Buffett is heavily invested in them. Yeah, I'm going to talk about Snow and their acquisition here in just a moment. Let me just finish with these quick notes right quick while they're on my mind. Treasury yields, they rose double-digit basis points today after a two-day plunge that sent them down incredibly far, illustrating how negative sentiment had gotten between because of the geopolitical tensions. The 2-year yield, it jumped 22 basis points to 1.52%, and the 10-year jumped 16 basis points to 1.87%. People were going back into equities today, baby, getting out of those bonds. The ADP Employment Change Report, it estimates that 475,000 jobs were added to private sector payrolls in February, and the estimate sits around 350,000. So that's what we should see on Friday. But again, it's an estimate. Weekly crude oil inventories, they actually decreased by 2.6 million barrels after increasing by 4.5 million barrels last week. All right, here's where we stand real quick. The Dow Jones is still in the lead. It's been the leader all year. It's down 6.7% year to date now. The S&P 500 is down 8% year to date now. The Russell 2000, it's out of correction territory. It's down 8.3% year to date now. The NASDAQ is still in correction territory, down 12.1% year to date, because tech, that got hit the biggest as far as the equities. So that's why they are down, still in correction territory. All right, let's move on now to some other specific stocks in the market. Snowflake, right? SNOW, Snowflake shares, they plunged. Last time I checked, they were down just about 30%. SNOW for Snowflake. I think oil has reached its peak. Is there a ticker to bet against oil? Oh, I typed snow into the comments. No, snow is not the ticker for to short oil. My apologies. I need to pay attention to where my cursor is here. Snow is now down 22.5%. It was down, of course, 30% a little bit earlier, but it has come back some from the brink. And actually, I have to adjust the chart here so we can actually see where snow is trading at, because it's all the way down here at $200. It's right about here. It's sitting at $205 right now. Let me change that to bright red there. That's where snow is sitting, right at $205. I believe it broke to, yep, it did. It got, I think it broke $200 in after hours, but it's not showing me a low for that. It's showing me a low for the day, but it's not showing after hours yet. So we'll have to wait till tomorrow's open to see that. But I think it did get below $200 a share for a moment when it was down closer to 30% for snow. But that's a big drop for this company. There were a lot of people investing in snow, and it's been in a downtrend now here for a while. Since last earnings, it has been falling. We have to go all the way back here to November 17th, November 16th for its peak up here when it just crossed over $400 and got to $405 a share. And then if we go back here to this end of January, we have this low point here. There was a buy signal at this point, and it went on a little rally going from right about $243 up to about $326. So pretty nice rally there, but it's been falling ever since. And then the earnings come out today and a big plunge down 22.5% right this second. So why did it fall so much? Well, losses widened for Q4. Q4 EPS came in at a loss of 43 cents a share, which beat by 12 cents. And you'd think, well, hey, isn't that a good thing? It beat estimates, right? Okay, sure. That's one way to look at it. But if you compare, right? If you compare last earnings, previous earnings, look, last earnings, they reported a 4-cent profit. All right. A 4-cent profit. Now, this quarter, they reported a loss of 43 cents. A loss of 43 cents. So that's a big difference. Now, they also had revenue of $383.77 million. That was a 101.6% year over year gain. That beat by 10.9 million. And if we go back here and look, last quarter, they reported 334 million. So a nice gain there. It's the earnings, the profit. That is the big draw here, right? Also, Q1 guidance, they have product revenue to be expected in the range of 383 to 388 million, which would be a 79 to 81% year over year gain. And the full year product revenue is going to be in the range of 1.88 billion to 1.9 billion, which is somewhere between a 65 to 67% year over year gain. Now, also, Snowflake announced that it is going to acquire Streamlit. All right, and if we just go in here real quick and pull this up, should have had this already pulled up. But if we go here and you search for streamlit.io, this is who Snowflake is going to buy. They already have a banner here at the top. Snowflake has entered into an agreement to acquire Streamlit. Read more right there. So anyways, Snowflake in buying Streamlit. So Streamlit is a framework to build and simplify and accelerate data applications. Okay, so if you want to build an app to search through data, uh, obviously that's Snowflake's business. That's what they do. But right here with Streamlit, Streamlit is a way to build those apps in a quick way, right? So this is just adding to the toolbox that Snowflake will have for developers. Now, the terms of the deal were undisclosed, so we don't know how much they're paying. But Streamlit, this is what we're able to dig up. They have over 8 million downloads and more than 1.5 million applications that have been built using their framework. So that's a nice user base right there. Now, Streamlit users will benefit from greater resources for continued innovation on Streamlit's framework and easier access to trusted and secure data to power their data applications. That's what Streamlit is going to get from Snowflake. Now, what Snowflake will get from Streamlit is their customers will be able to leverage Streamlit's robust app development framework to further unlock data with the Snowflake Data Cloud. Okay, so that's something interesting there. I would love to know how much Snowflake paid for Streamlit. I'm sure that information will come out sometime in the future, but investors just are not happy about Snowflake taking a bigger loss than expected on its earnings, on its profit, and of course, this planned acquisition. That's not going to help EPS either, right? Okay, so a couple things there about snowflake for you. All right. Just real quick. All right. So, your question about shorting oil. All right. Yep. I do have some here. All right. So let me go into my list here of my favorite ETFs to use. And let's see here. Not that. Where are you? All right. One of the ones that we can use for shorting oil, I'll put the ticker in the comments here and the name of it. Um, Let me make sure. Okay. All right. The first one there. All right. NRGD. That's the first one that I use to short oil there. And you can see as oil has been on a complete rally, this has not. It's been moving in the opposite direction. Uh, Big drops. We go back here to October of 2020. Big drop. But look at the volume, though. If we look at this, you can tell that these types of ETNs, right? They are getting more and more popular. And you can tell that by looking at the volume. It is incredible. Back here, when the price of this particular one was up to $409 a share, $409 a share. It's now down to $2.89 a share. And they did do a stock split, a 10-for-1 split back here in March of 21, so just about a year ago. But the volume is barely readable back here when it was up at over $400 a share there. Now, we fast forward to today and look at the volume. I mean, it is just incredible the amount of volume here that's going on. So these ETNs are becoming way more popular um, than they've ever been, which is incredible. So, think about this. This was up to over $400 a share back in October of 2020. That's just incredible to think about. And now it's down to $2. So that's one that is my favorite to use for shorting oil. Let's see here. There's also another one called DRIP. The ticker symbol is DRIP. I'll put that in there as well. All right. So drip right now is sitting at $3.09 a share. And you'll see the exact same pattern. Both of them are going to be moving in the same direction. And we can go back here to this same bump, October of 2020, big bump. This one would have been trading at $76 a share. And that was right after a stock split. They did a stock split here, 10 for 1 on August 2020. And then this thing ran up to $80 a share or so. And they do have a stock split scheduled at the end of this year, another 10 for 1. So if you're holding one share, then you'll end up with 10 shares after that. So that's coming up again on March the 28th. And this is the ticker symbol is DRIP, DRIP. So those are two that you can play with right now. So if you're bullish on oil, I usually play with Gush, GU, SH. And then if you're short on that, you've got the NRGD. And then you also have DRIP, DRIP. All right. So though that's that. Now the shorting ones, drip and NRGD, those two, they're both inverse, right? So they're going to move in the opposite direction that oil is going to move in. Uh, all right, just okay, just checking to see if I was using any others, but I'm not. Those would be the two there. And actually, in the after hours, it doesn't show here on TradingView, but in the after hours, it's actually moved about 0.3% in the up positive direction. Drip has. So it's up to $310 a share right now. So with oil moving up so quickly, that would be a very, very interesting one there, drip, to watch as you're bearish on oil, because if something gets worked out with Ukraine and Russia, with the supposed ceasefire, now I don't believe Putin for 1 second, but if that ceasefire does provide anything, uh, then oil would probably go back down quite a bit. So you've got drip there that you can use for shorting oil. Okay, let's look at ChargePoint. They had, and if you have any other questions, feel free to plug them in here in the comments. I'll do my best to answer them. All right. So moving on to ChargePoint, they also came out with earnings in the after hours. CHPT is their ticker symbol. Okay, ChargePoint, they had Q4 EPS at a loss of 23 cents, and that actually missed by 5 pennies. By 5 pennies, they missed. They were down 1.5% during regular session, but they're up 7.6% in the after hours. So ChargePoint's moving in the right direction here. And if we close in here on them, they're up right here to their 50-day moving average. That's where they are right now. So again, not a whole lot higher from where they closed the day, but a little bit. That circle right there, I'll change that to a green. That's where they are at right now, up 7.6%. That's where the candle will start tomorrow. when they opened. Now, they had revenue of 80.7 million, and that was a 90.3% year-over-year gain, and that actually beat by $4.57 million. So pretty decent earnings there from ChargePoint. They are getting their chargers out there, and not just in the US, they're also getting their chargers out in Europe as well. Now, for their fiscal year guidance, they're showing revenue of $450 to $500 million. That's a big boost. The estimate for their annual revenue was only $237 million. So they're doubling, almost tripling what their estimate for annual revenue was. And that's why the stock is up 6.7, dyslexic, read that backwards, 7.6% in the after hours. It's because of that annual revenue. Now, at the midpoint of that revenue, this would represent an increase of 96% as compared to the prior year. That's a big deal. That is some serious growth. Now, the non-GAAP gross margin of 22 to 26%, non-GAAP operating expenses of $350 to $370 million, and at the midpoint, this represents an increase of 50% as compared to a year ago. There's over 174,000 what they call ports were activated as of January the 31st. So as of, let's see, it's the beginning of March, as of a month ago, as of 1 month ago, they had 174,000 ports, as they call it, active. That is really good for them. Now, there's approximately, though, 51,000 of those ports in Europe. Good job, ChargePoint. They're doing really good. Very proud of this company. We've been talking about them. Jiminy Crickets, when we started doing this live stream, that was one that we focused on quite heavily because we talked a lot about the whole electric space, but we kind of moved away from that a little bit. But yeah, ChargePoint's always been on the radar. Love the company. All right, moving on to Splunk. This is one that blew up a while ago. SPLK is the ticker symbol for Splunk. Let's see, they were down 1.3% in regular session, but they are up 1.6% in after hours. Now, they reported an EPS at a loss of 88 cents, which actually beat by 90 cents on revenue of $901.1 million, a 20.9 year-over-year gain, and that beats by 124.7 million. They are going to get a billion-dollar quarter very soon. I can feel it. It's in the air. A billion-dollar quarter. That is going to be incredible when that happens. Now, on the chart here, you can see they have been range-bound since their big fall last quarter there, or right prior to that, where they had some management change and information came out a few days before earnings, sent the stock way down, and sent it back down to where it was before it made its reversal right here before that last big rally. But yeah, it's been range bound here with a low really somewhere around $110 a share ish. And then we've got this high somewhere right around $120 to $124 a share as really the high point. Now, for guidance for Q1 22 and fiscal year 22 for the whole year, Guidance are both above estimates. That's all I've got right now. All right, moving on from Splunk here, let's go to Samsara. This is one of my favorites. The stock has been bouncing around. Ticker symbol IOT. Samsara is one that we've had on our list now for a while. Since their IPO, we've been talking about them. But you can see, I mean, this stock's just been down, up, down, started to go back up, and then it just came down today. I did add more shares today when it came down. It was down to 5.2%, but it's up 14.7% in the after hours. So you can see where the candle is for today, but the blue line right here, it's too hard to see. I don't even see it on my computer. But that's where the stock is at right now, just below its 21-day moving average. Its 50-day moving average just showed up on the chart a few days ago because they haven't been public for 50 days yet. So they have now, obviously, but that's why the 50-day moving average is just showing up, and it's just a little line here right now. All right, so Samsara, Internet of Things, IoT is the uh, ticker symbol, but they are Internet of Things for companies, right? So they reported an EPS at a loss of 5 cents. That beat by 3 cents on revenue of $125.8 million. That's a 66% year over year gain, and that beat by $9.5 million. Now, for guidance, for Q1, they are guiding EPS at around a loss of 7 to 8 cents a share. The estimated what they have right now is a loss of 8 cents per share. So right there in line with that. Now, revenue, they're guiding to 130 to 132 million dollars, and this is above estimates. The estimate for them is 124.4 million dollars. So that's good. They're guiding above on revenue. Now, for the whole year, fiscal year 23, they're looking for EPS at a loss of 27 to 25 cents on revenue of 568 to 578 million dollars. That's where Samsara is sitting. Now, this is a company that I actually absolutely love, and I'm holding them for the future. But the stock has been volatile, and it is in a downtrend since reaching its highs here. I mean, we can put this line on it right here as a top. We want to give it a top there. And quite frankly, if we wanted to go in at the bottom here, I would probably line up this low here and bring it somewhere like this, right about there, for a wedge pattern here, a symmetrical triangle kind of forming there on the long-term view for them on the chart. But again, they're up here 14.7% in the after hours, tapping that 21-day moving average. All right, let's do my deep dive on CRM, Salesforce. This is a company that is only going to continue to grow. They're going to continue to grow. And if you look, they have pulled back significantly. We measure from their high up here, which was hit right here on November the 9th. Let's line it up there. And we go to where they are when they closed. It would be right about here. They are down 32.6%. 32.6%. Now, I believe Salesforce.com is a company that works really well in our current environment, especially when people are not working in an office. Now, Salesforce, it's a great company and their products are superior even for people who are working in an office setting. But, sorry about that. But it's worked really well when people are working out of the office. So to me, it doesn't matter whether people are coming back into the office. We had a lot of news today breaking about companies announcing that they were going to return back to work. Google even announced that their employees were going to come back to the office. So a lot of companies are talking about that. So Salesforce still a great company for that. And right now they're on a 32% discount from that all-time high there. And if we go back in history a little bit further, you can see, I mean, the stock is elevated, right? But it has pulled back. Now, right now, if we look at where it is, and if we go back here and look at this area between the beginning of December of 2020, and we go all the way until July of 2021, Salesforce was range bound, right? It was trading in this range right here. So Salesforce right now is getting back into the bottom of that range. So that's a good thing. That's a good thing, meaning that Salesforce may be able to start filling in the distance here, right? And let me just say, maybe Salesforce is gonna, do something, like this, and it's just gonna fill in this gap here until it gets back to the top of that range that it was in. And then at that point, we can decide, well, is the stock gonna, break out of that range, or you reverse and continue back down to the bottom of it and stay in that same pattern where it was range bound. That's a possibility that we need to think about here. Okay. For Salesforce, because they are getting back into the bottom of that range, which is a good thing. And as far as I'm concerned, they had a good earnings report. There were there was something a little soft in there, and guidance. But again, there was something a little soft about guidance. But let's get into it. Salesforce. Today it traded roughly flat, right? Up 0.7% during regular session, down 0.8% in the after hours. So Salesforce traded flat today, following the company's Q4 earnings. Even though Salesforce achieved its seventh EPS beat in a row, Salesforce experienced strong demand across all products, all regions, and all customer sizes. The pandemic has spurred the company to rethink their digital capabilities in terms of sales, their sales force, and automating or automation for that, to rethink the customer service aspect of their company, the marketing automation that their company has, and even analytics. And Salesforce's Q4 results reflect that initiative from other businesses. other businesses rethinking their digital strategy. Okay. EPS was again well ahead of expectations, but if I could nitpick about one little thing, it would be the size of the beat. The size of their EPS beat was smaller than its most recent earnings. And it wasn't in the double digit range for the first time in several quarters. Yeah, that if that's the nitpick you have, that's not a very bad nitpick, right? But revenue, it rose 25.9% year over year to $7.33 billion, nicely above prior guidance. Now, Salesforce, their core business, continues to perform really well. Salesforce Cloud and Service Cloud are now both $6 billion businesses annually. And in Q4, Sales Cloud grew by 17% and Service Cloud grew by 18% year over year for both of them. Salesforce posted great performance across every region, up 23% in the Americas, 38% in the EMEA, and 20% in the APAC. Current RPO rose 22% year over year to $22 billion, down only slightly from the 23% growth in Q3. Now, the report's main problem was the company's guidance. Okay. Salesforce guided Q1 EPS well below estimates, while its revenue guidance was better than expected. But I have come to expect downside EPS guidance from Salesforce, as the company also tends to lean conservatively on that metric. That also explains why Salesforce tends to report a big EPS upside, because they're conservative on their EPS guidance. It may be a strategy, but it's definitely a pattern for those who didn't know. This period featured the second full quarter of its recently acquired Slack in the fold. Revenue from Slack came in at $312 million, a solid 11% quarterly gain. And I must admit, I did have doubts that Slack was the right fit for Salesforce. But so far, it's contributing pretty well to revenue. Other highlights included the company's metrics on large deals. The number of seven-figure deals signed in Q4 that grew 34% year over year, and its number of eight-figure deals more than doubled. The bottom line on Salesforce: demand clearly remains robust due to high interest in digital transformation. It seems that even as the pandemic winds down, companies are not slowing their transitions to digital, and they shouldn't. The stock is taking a modest hit, mostly on the lackluster guidance and the more modest EPS beat. I'm a bit surprised by the stock's reaction, though. Granted, this was not Salesforce's greatest report, but it was still quite good, and the stock's price has already dropped a third since mid November, as we looked at before we started talking about the company. Overall, though, the move that the stock has recorded in recent months strikes me as perhaps overdone. Just like I talked about at the beginning of this live stream, a lot of the stock market is always an overreaction. You go up too high, you go down too far. But that's why people who are realists do well in the stock market. All right, that's what I think about Salesforce's earnings report and, of course, their guidance they gave. I don't think it's that bad. I think it's pretty good. But what did you think about their soft guidance? And do you think that the stock at $208.51 is fairly valued? Let me know in the comments below, as your comments make these videos so much better. All right. That is everything that I wanted to talk about today. And if there are no other questions, then I'll go ahead and wrap this live stream up. Now, if you found this information to be helpful, informative, actionable, then click that like button, take the URL, and share it wherever you can. And if you wouldn't mind, click that join button, or if you would prefer, you can click the first link in the description to become a member. Either way is fine. It helps to support the channel and also gives you something in return that is very valuable to have. All right, ladies and gentlemen, thank you so very much for watching, and I'll see you in the next video.